Hi, and welcome to the Stock Scores Market Minutes for April 18th, 2016. All right, let's talk about this idea that the best trades often are the ones that really don't feel very good. You know, what happens in the market is you get it reacting to information all of the time. And when the chart gives you a good entry signal, but you can't find anything in the news, there's no information to justify that news, it's very difficult for you as a trader to be committed to the trade. You haven't seen any proof that the reaction in the market is correct. And therefore, sometimes the best trades feel wrong, because what you have to remember is that the market moves on what the information will be in the future. When you have a market reacting in a way that doesn't make sense, it is likely that some people have some information that you just don't have. And they are trading on that information and creating the activity that has caught your attention. Now, by the time you find out what the information is, often that information has been priced into the market by a move higher or lower if it's bad information. And if you wait for the story to keep up with the market activity, often you take the trade too late. So some of the best trades are those that make no sense because it's a market reacting to information that the majority of people do not know yet. And when more people know about it, the stock will have priced in that information much more and have made a good trend move. All right, let's look at the trends of the different indexes that I like to follow each week. This is the chart of the S&P 500 ETF, SPY. And what I've done here is I've drawn ahead of time the upward sloping channel. You can see the upper and lower boundary. And we're kind of in the middle of the channel right now, which means in terms of being overbought, oversold, we're neutral, but it is a bullish chart because the trend is up. On the weekly chart of the S&P 500, it was a very important week because that downward trend line that I have spoken about so many times has just barely been broken. I didn't draw that line very well, but trust me when I say, and I can only draw these lines freehand, it's just slightly above the trend line. Now, that doesn't really mean that the trend has been broken. It's kind of borderline. I would say this is a bullish chart, but the problems are that there's not very far to go before resistance is hit. And as I've said many times, when markets rally into resistance, they usually get stuck at resistance. Now, we were stuck at the downward trend line for a week, broke through this week. Next stop, 210. Probably get stuck there. Next stop after that, roughly 213, the old highs from last spring. On the Russell 2000, similar situation. We're just trying to tickle through that downward trend line. You could argue that we've broken through it, but here at least there's more upside potential. And I have noticed that there's some better activity in some of the small cap sectors as they play catch up to the large cap, which have led the way. On the TSX, we have had a nice little run higher here, and that's really as oil prices stabilized and went up ahead of this meeting in Doha. Now, that meeting is going to be critical for the Canadian market because, of course, there's such a strong correlation for the Canadian market to the price of oil. We're basically risen up to resistance. I would call this a neutral chart, but if we break through on Monday, then we could see even further upside. So this is, I'm calling it a neutral chart, but it's on the edge of being optimistic or a bullish chart if we can get that breakout. And here you see why. On the weekly chart, we broke the downward trend right there. We built a rising bottom right there. And then this past week, we broke from that rising bottom. And that is a sign that the Canadian market wants to go higher. But again, we just need to get through that little bit of resistance that's right there. And that will depend very much on what happens with oil next week. Now, the TSX Venture has been really the top performing market over the last couple of months. And if you've avoided this market over the last few years, good for you. That's what you should have done. But now the money is coming back to the penny stocks. Things like lithium, the gold miners, they're catching bids again. And it's actually, surprisingly, a good place to trade the last little while. Now you got to be cautious because if commodity prices roll over, then so too will this market. But for now, it is a bullish little chart. All right, on the 20-year treasuries, I'm kind of stuck in this little range here, built a rising bottom. We've got optimism. I think it probably wants to get back up into here, which means that interest rates go down as this goes up. I wouldn't call it an overly bullish chart. It's sort of moving higher slowly and steadily. On the US dollar, you can see that we have broken the downward trend line late last week, around Wednesday, not from a rising bottom, from a low. So it still has to build a rising bottom and then try to break up from that. But there does seem to be some signs of stability in the US dollar, which has been kind of beat up over the last month and a half or so. Gold, which has benefited from the fall in the US dollar, lost some ground when the US dollar showed some strength. It's still a decent chart. It had a little flag pattern here, upward trend, flag pattern, break of a flag. It's now retesting that, but it looks like it wants to build some rising bottoms. I call this a neutral to optimistic chart. It's hard to be too bullish on it because it's so wishy-washy. It trades with a lot of volatility. People having trouble figuring out what's going on with gold. On the oil side, again, real important meeting. We saw oil rally up to resistance on that meeting. If you follow me on Twitter, you will know that I highlighted that oil was rallying into resistance and likely to get stuck, rolled over a little bit. That's totally expected ahead of such an important fundamental event. And it's really tough to call what will happen out of that event. Given that we've been building rising bottoms, I think the more likely outcome is that oil moves higher in the next couple of weeks, but it's going to depend a lot on what goes on politically within OPEC. For now, I would call this a neutral to optimistic chart, but expect some volatility in the near term. And fear, sorry, I've got the wrong chart in here. Fear is way down at a low. It basically showing that the market is complacent. So U.S. stocks, neutral, long-term, bullish short-term. Canadian stocks, bullish short-term, bullish long-term. Again, we had that break from a rising bottom. Neutral short-term. Gold, neutral on both time frames. Oil, neutral on both time frames. But those could switch very quickly with movements in the U.S. dollar or things going on with commodity prices. So U.S. stocks have broken the downward trend line this week on the weekly, barely, leading to a likely move back to all-time highs where resistance will be hit, not very far away. Canadian stocks are at the mercy of commodity prices, which are improving. Gold and oil working to stabilize and build that optimism, but there's still lots of work to be done. It takes time to reverse those long-term downward trends, and people still second-guess the attempt at the reversal. Fear has turned into complacency, and that always makes me a little cautious with stocks. That has been the Stock Scores Market Minutes for April 18th, 2016. Have a great week in the market and trade well.